Hey guys, Stock Saturday, and it's a bit of a rough week. You can see here everything is red. This is just Friday, of course, but yeah, pretty much everything's red for the week. Had sort of some news come out, and we've had the sort of mini collapse of quite a big bank in the US, Silicon Valley Bank, and it's sort of now obviously coming out. Everyone sort of saying, "Oh yes, we've got 3 billion, we've got 5 billion with them," so that money might be lost. This is sort of my dislike of the banks. I didn't realise. I sort of thought, as a rule of thumb, most of them were sort of 10 times leveraged. So if you deposit, £100, they'll lend out £1,000. Obviously, that's risky, but has always been the case. But I was reading some of these sort of lesser banks are sort of up to 25 times leveraged. So £2,500 for every £100 deposited with them. And that also means if you lose 4% on those investments, lose 4% on your £2,500, you've effectively not got enough money to pay back the depositors. So, yeah, losing 4% doesn't seem all that unlikely, and I think it's a very sort of risky practice. But yeah, that's why I've never liked the banks, and partly why I'm sort of into crypto, to be honest. But there you go. So down about 9,000 for the week, and yeah, forget that. Let's have a bit of news. So it's kind of a China week in terms of earnings. Quite a few sort of reporting. Baidu had their fourth quarter. I'm sort of fairly keen on Baidu, Tencent, and Alibaba, but Baidu I think doesn't get sort of mentioned all that much, and yeah, they're not looking too bad. Revenue ever so slightly up from last quarter. It's like, pretty much flat on last year. This is sort of against the lockdown year last year and sort of part of this 2022. So, yeah, obviously the sort of search engines don't get hurt quite so much as people like Alibaba maybe, or Tencent. But yeah, they've sort of had losses and bits and pieces last year, which haven't come into play this year. So, or this quarter. So, operating income up 135%, but you've got to obviously compare that to pre-COVID years or sort of ordinary years rather than last year. But come down to their segment analysis, I think that's sort of the key thing to look at, really. It's a very sort of mishmash of different businesses, which you're basically hoping sort of one or two of them do really well. It's a bit like the sort of other bets side of Google. Just the other bet side of Baidu is sort of quite a bit bigger. With the cloud side, I guess, isn't really other bets, but it's sort of not the highly profitable search that they have. But that's doing okay. Not really growing as much as the sort of US, Microsoft, and Amazon and Google, but doing okay. But the intelligent driving, this is one that I'm sort of very keen on with them. I don't think gets as much praise as it really should do. They've received a license to test vehicles with no driver or safety operator, and sort of going reasonably well. Autonomous ride hailing provided 560,000 rides, up 162% year on year. And so I guess this is with a driver sat in the car. So they're making a loss on that. But yeah, eventually, if they can have no driver, then that's pretty good. And I think sort of the Tesla bulls that say, Tesla are 5 years ahead of everyone else is a little bit strange when you've got sort of competitors actually on the road and making sales. So there you go. And then sort of the more core side, monthly active ordinary Baidu app users up 4%, which is pretty good. 648 million users, which is good. And their video platform, 116 million subscribers compared to 97 million last year, and so it's up 11, nearly 11 million subscribers this quarter. So that was very good. And yeah, balance sheet still looks great, just sort of coming down to there, very, very cash heavy, and not a lot of debt. So all good for Baidu. Moving on to Alibaba. This is quite a big report, so I haven't sort of read the whole thing just yet. I want to sort of have a bit of a deeper dive, but just looking at the sort of brief financials, it's they're sort of showing a rough year for last year, so the comparisons are rather easy to be good. Income from operations up 396%, and revenue sort of up 2%. So people still sort of buying things even when they're locked down. But net income up 138% as well. So yeah, everything's up, but forecasts sort of look okay, and market doesn't seem to have taken this all that well. I should say Baidu was down 12% nearly for the week, and Alibaba sort of down about 8%, I think it is. But it's just the market as well. Looking at their quarter segment results, which is, again, you really have to sort of split these companies up, very much sort of a conglomerate. So customer management down, direct sales and others up 10%. So revenue as a whole basically flat. International commerce up reasonably well, although it's a very small part of revenue, and then sort of the other smaller bets type things. Sort of cloud not doing too well, 3% up, as I say, not doing quite as well as the sort of US side, but yeah, okay. I'd probably say out of the three, this is my least sort of conviction bet. I do prefer Tencent really as a sort of main holding, but they haven't reported, so that'll be in a couple of weeks. Just a quick word on Tencent though. A lot of people do sort of focus on their 13F as sort of an indication of their portfolio, and if you sort of look at this, this is their last 13F, and sort of has Pinduoduo as the top holding, and sort of Tencent Music Entertainment Group, Futu and Key Holdings, and a bit of C and Neo. But I do sort of have always wondered sort of basically how much of an impact the smaller companies do have. If you sort of come to various, there's websites that sort of track their very, very small venture capital stuff, and this one sort of it says there 1,121 different investments, which I imagine is tremendously difficult to keep track of. But you can sort of see, I don't pay for sort of this sort of thing, but you can see various sort of investments just in the last month, sort of 62 million here, 3 million here, 10 million here. So it's just endless sort of small seed investments, Series B funding rounds and that sort of thing. And I mean, this is sort of essentially how Tencent started, was very, very early on they got a huge load of seed capital from Process, and sort of that helped them on their way. It was about 30 million. So yeah, any one of these businesses has the potential to do really well, and Tencent have got them at a great price. And it's sort of very much the you bet on 10, one of them does well, and the other 9 basically go bust. But the one that does well, goes up 100x and pays for everything you invested. So, yeah, I don't think this sort of thing gets really factored in. Looking at the balance sheet sort of before, it's a little bit sort of unusual. Not entirely sure where they put these. They sort of have investments in subsidiaries, investments in sort of other companies and sort of various wording as to where it could be, but the maths doesn't seem to sort of add up. So I think this is potentially sort of hidden value. And on the larger side of things, this is, I've sort of shown this before, I think, a sort of an indication of where they were really at 2018. But this sort of shows some of the other much larger holdings that they've had at one point, and it's sort of whether they've got rid of some of these. So the sort of famous one was Tesla. They bought 5% of Tesla way back at sort of very, very cheap price, and the sort of indication was that they'd sold it a couple of years ago. But there was an article recently came out, and their chief exploration officer, David Wallerstein, said he still counts the company to keep blowing our minds with what they do with their technology. So this sort of seems a little bit strange that they would have sold everything and still be sort of, taken a great interest and sort of discussing them. If they'd be bullish, why they would have sort of sold their stake back then. It wasn't clear they were going to survive when they made the investment, and the EVs were actually going to survive. And he's talking sort of very positively about them. There's sort of no indication that this has been sold off. So it wouldn't be, you would sort of say it wouldn't be 5% of the company anymore, because they've diluted, Tesla have diluted quite a bit of the shares outstanding for sort of capital raises, and if Tencent obviously haven't participated in that, then they wouldn't own 5%, but I believe they would own about 4% if they hadn't sold anything, which would make it sort of quite a large holding, sort of going by the 13F, I think it would be number 2, sort of maybe 20 or 30 billion dollars. I can't remember how much it was. And Tencent's very volatile. Tesla's very volatile, sorry. So yeah, I thought that was rather interesting. You sort of got a number of others ones here. Spotify sort of 7.5%, and the gaming side, sort of Activision Blizzard 5%. I guess if they own that, then they're going to get given cash by Microsoft if that goes through. And then sort of your 40% of Epic Games, again, sort of where that goes on the balance sheet is a little bit up in the air. 5% of Ubisoft was interesting. 12% of Snapchat. So yeah, it would seem strange if they'd sort of sold all of these off, especially the gaming companies, because I believe they sort of hold these to basically get publishing rights for China. So to sort of buy you 5% of Ubisoft and Blizzard and then sort of sell it off not too long later would seem a bit strange. And you would think they should be on the 13F, given they're a publicly traded company. But yeah, I still sort of always trying to research this, but think there could be a little bit of hidden value in Tencent. Coming back to the UK then, a quick look at Tritax Big Box. They released their earnings. Operating profit up slightly, but you never really look at sort of anything that isn't per share, because obviously they're diluting all the time and raising debt for more properties. So you really want to look at a sort of per share basis. They don't sort of give funds from operations like the US side do, but they do a sort of equivalent adjusted earnings per share basically, and that's down 5% on the year, excluding additional development management income. They're actually up 1.8%, so they've got some accounting adjustments in there, and yeah, obviously taken strictly net profit is sort of down greatly, because they're marking down commercial property and industrial property, but the dividend up 4.5% per share, so yeah, reasonably good. Payout ratio up slightly, it's always high because it's a REIT. But yeah, not too bad. Portfolio down about 7.7%, so that's a fair bit of a hit, and it sort of takes the loan to value percentage up. But yeah, not sort of looking all that bad. They've sort of been hit along with a lot of the other REITs. UK REITs sort of been hit reasonably hard in the last sort of month. But yeah, not too bad. Not something that I'm looking to pile into at the moment, but it's more sort of longer term. Hopefully the crypto money will go in here. Lastly, just checking the news. Not all that much news this week. Halifax house price index disagrees with the other house price indexes, saying a 1.1% positive move for February against sort of an expected minus 0.3%. So that's a bit strange and not what most people think. Thursday, you had a slight rise in the sort of unemployment claims, a bit more than expected, and then this was sort of slightly backed up, although a bit of a mixed bag on Friday. We had the non-farm payrolls was 311,000 jobs against an expected 205,000 jobs, but the unemployment rate went up. So more jobs were gained than expected, but more people are unemployed, which is a little bit strange. So, yeah, market has sort of taken this a little bit oddly, although it was the same day as a lot of the sort of Silicon Valley Bank stuff came out, so not really sure sort of how much of it is down to that. You can look at sort of futures charts at sort of exactly 1:30 UK time, because that's sort of when the results come out, and you'll often see a heavy movement. But yeah, I think Friday was sort of mainly the bank stuff. So yes, that's the portfolio for the week. I did take rather a large hit from Silvergate Capital. Obviously, terrible investment. They've sort of basically announced that they're shutting down, so that's not very good at all. Potential, I guess, for them to salvage something for shareholders, but I'm not expecting too much, so could basically just count it as Argo blockchain went bust. Basically, that's what I was expecting, and I put the Argo money into Silvergate, so yeah, I basically just sort of write that off and put it down to experience, move on. But yeah, a lot of the other holdings are down. Sylvania Platinum back under £1, so that's not very happy at the moment. Been sort of very volatile recently. I do have my treasuries position, I believe, going ex-dividend this week, so I guess that'll be dropping a reasonable amount, but I'll be entitled to a payout. Not too sure sort of still how long I want to hold this. I am considering if we get another reasonable drop on the Bitcoin miners, sort of maybe towards the end of the month, piling a load into those. So yeah, as I say, the Chinese tech, I was green on Alibaba, I think, pretty much, and that's back down to 20% red. Still green on Baidu, but yeah, it's a rough week, but I have to take it and move on. Let me know how you guys are doing, if you've lost less than me, more than me, or if you're buying the dip on anything, and like and subscribe. See you soon.